Today, U.S. markets are reopening after the bank holiday. The economic calendar contains PMIs and existing home sales. Investors are ready to evaluate consumer activity. Large U.S. retailers have already reported on their earnings in the fourth quarter and presented their forecast for this year. InstaForex analysts have assessed the prospects and are eager to share their conclusions. U.S. trading floors were closed on Monday, so futures on the benchmark stock indexes closed almost flat. Wall Street indexes traded in the red in the New York pre-market. Futures on the Dow Jones slipped by 0.6%. The Nasdaq dropped by 0.9% and the S&P 500 shed 0.5%. The index is expected to trade in the intraday corridor between 3,970 and 4,090 points. Wall Street is reopening after President's Day celebrated on Monday. The U.S. manufacturing and services PMIs are due after the opening bell. Investors are facing a dilemma making forecasts. On the one hand, the robust U.S. economy reduces recession risks. On the other hand, strong macroeconomic data propel inflation and wreck any hopes for the completion of the tightening cycle this year. At present, the consensus suggests that the official funds rate will peak at 5.30% in July and remain above 5% by the year end. Investors will gain more insights about the Fed's agenda on a Wednesday, when the minutes of the last meeting will be available. Notably, the Fed made these decisions before the crucial data, so the minutes might lose their importance. Apart from business surveys to be released on Tuesday, investors are anticipating corporate reports from the U.S. retailers in the light of a hot retail sales data for January. Top U.S. retailers have already unveiled their earnings for the fourth quarter that has spoiled market sentiment. Walmart presented a lower-than-expected revenue forecast for the year. The company runs more than 5,000 stores in the United States and has enough leverage to agree beneficial wholesale prices with its suppliers. The retailer made cautious statements on economic prospects for this year. The company's profit could be eroded by lower price tags, promo campaigns, weak consumer sentiment, and the decision to raise wages to its employees. Besides, there is no guarantee that Walmart will be able to hold retail prices at low levels to boost demand. Its large suppliers such as Nestlé, Coca-Cola, and Procter & Gamble announced price increases this year. On the plus side, Walmart reported an overall revenue of $164.05 billion in the fourth quarter, 7.3% up from a year ago. The net quarterly profit expanded by 76.2% to $6.28 billion. Another U.S. retailer, Home Depot, also predicts an annual profit lower than a Wall Street forecast because demand is going down due to soaring inflation. The company reported an unexpected sales decline in the fourth quarter. As a result, its shares dropped by 4% in the pre-market. The companies with a mega market capitalization such as Apple, Amazon, Microsoft, Tesla, and Alphabet, the shares fell by 1% and 1.5% in the New York pre-market. Yields of the benchmark 10-year treasuries went up. Meta encouraged investors and gained 2% after Facebook's parent company said that it was rolling out a new paid verification subscription service called Meta Verified. The US dollar climbed modestly intraday. At the moment of recording this video, its index was trading at about 104 points. The intraday corridor for the index is seen between 103.70 and 104.50. The US dollar is on a track to the strongest one-month performance since September 2022. Today, the greenback is advancing against all major currencies, except the pound sterling, and the British pound gained 0.7% against the greenback as the UK PMIs recovered much higher than expected. Nevertheless, investors are poised to buy safe haven assets. Yields of 10-year treasuries rose to 3.852% after hitting a 3.939% on Friday, a three-month high. Yields of 30-year treasuries climbed by 1.1 basis points. Two-year treasuries, which commonly move in sync to expectations of interest rates, also gained 3.5 basis points. The U.S. manufacturing PMI will be released later on Tuesday. Still, crucial events for the U.S. dollar are ahead of this week. Investors are anticipating the Fed's minutes of the last policy meeting, when interest rates were increased by 25 basis points. The PCE index, the Fed's preferable gauge of inflationary pressure, is due on Friday. It will provide a clue to the Fed's agenda for further rate hikes. The Canadian dollar is extending losses today, and the US dollar strength and a fall in oil prices are to blame for the luna's decline. The USD card pair grew 0.35% intraday to trade at 1.3490. The currency pair is likely to trade in the intraday corridor between 1.3470 and 1.3540. A red-hot report revealed signs of easing inflationary pressure and worsening consumer sentiment in Canada. The annual inflation rate in Canada slipped to 5.9% in January, the lowest reading since February 2022, and below the consensus of 6.1%. The CPI slowed down from 6.3% a month ago. Besides, retail sales, excluding cars, fell by 0.6% in December, following a revised 0.5% decline in November, much sharper than the expected 0.1% downtick. A decrease in oil prices also may convince the Bank of Canada to refrain from a further aggressive monetary tightening. Brent crude lost in value on Tuesday because investors fixed profits from yesterday's gains on the back of worries of an economic downturn. Thus, Brent crude shed 0.7% to trade at $82.46 a barrel. WTI depreciated by 0.5% to trade at $76.83. As for the crypto market, Bitcoin aimed to test the high of $25,000 but failed to challenge. The token skidded by 0.9% in the pre-market to trade at $24,500. Ethereum, Solana, Ripple, and Litecoin lost 1.8% and 3.5% in parallel. Quotes of cryptocurrencies received fresh impetus in light of the new rules in unlicensed issuance for crypto exchanges in Hong Kong. On a Monday, the Securities and Futures Commission released the rules for crypto firms and now invites traders to give their feedback. However, the burst of optimism was dampened by the US dollar's advance and the global risk aversion. Investors are in the wait-and-see mood. All in all, cryptocurrencies are set to trade under pressure ahead of the Fed's minutes and the PCE index. Interestingly, Bitcoin has surged by 14% in the last 7 days, and the total market capitalization of all crypto assets equals $1.13 trillion. Technically, Bitcoin is trapped within a range between $23,700 and $25,200. The intraday outlook suggested that the token could trade in a tighter range between $24,500 and $24,900. If the price goes beyond any of the borders, the crypto could test either support or resistance. Good luck in your trading and see you tomorrow.